On bank bail-ins, otherwise known as the legalized theft of your savings. I talk about the things that the media intentionally hides from you. So with that said, let's jump straight into it then. So what are bank bail-ins? Well, you're probably familiar with bank bailouts from the 2008 crisis and recession that emerged, where the government used taxpayers' money to bail out the banks, which became one of the biggest scandals in modern history. So a bank bail-in then is where the bank can legally take possession of your savings or your deposits and turn it into worthless banking stock. And yes, this is 100% legal. The USA actually passed a law in 2010 called statutory bail-ins, which includes extended powers to the Federal Reserve, the Securities and Exchange Commission, and the Federal Deposit Insurance Corporation, otherwise known as the FDIC, whereby bank holding companies and non-banking holding companies can be placed in receivership under the control of the FDIC. The IMF, my least favorite organization in the whole financial world, as many of you know, then produced a paper on the 24th of April 2012, which was all about bail-ins. I'll put that on screen now so that you can look at that if you want to read through that. So let me read this out to you. This paper published on the 24th of April 2012, where a new plan was created for solving banking crises. This included a bail-in mechanism that they say, and I quote, aims to ensure that banks, shareholders and creditors pay their share of costs. The key word here is creditors. That means you and it means I. We are bank creditors, and I'll explain what that means in a moment. Because just 11 months after this paper was published, we had the first bail-in, which took place in Cyprus in March of 2013. So what happened then? Well, the bank basically bailed in 21,000 savers who had more than 100,000 euros in their bank account. So these depositors here saw roughly 50% of their savings converted to equity, making them 81.4% owners of an insolvent bank. In other words, they got scammed. Oh, but we're not actually allowed to say that word, that it was a scam, because let's be honest, who wants to own a bankrupt banking stock? I don't, do you? So for those of you skeptics watching, I know there's a lot of you, and you think, Neil, you're just scaremongering, let me read this out to you. The bail-in was institutionalized in November of 2014 when the group of 20 nations, so this is the G20, including the United States, approved its use through the Financial Stability Board, the FSB. What else did the FSB do? They permitted the priority of the payment of bank derivatives above all other creditors. This is outrageous, ladies and gentlemen. If you don't know about the derivatives market, it's too much to cover in this video, but it is one of the biggest scandals that exists in the world right now. Hundreds of trillions, probably at last guess around $650 trillion exists in the derivatives market. And what this policy says is that when the derivatives market pops, and it will, mark my words, it will eventually pop, the banks and the financial gamblers get paid out before you do. And you've got your politicians to thank for this based on all the lobbying that the banks do. So in effect, with bail-in, they don't steal your money, because I'm not allowed to say that. What they do is they convert it into assets. But in my mind, that's just a smokescreen, because if you don't have a choice, then to me, that's theft. That would be like you walking down the street and someone coming up and robbing you and stealing all the money out of your pocket. This is the comparison of what's going on right now. Next, the IMF conducted a debt sustainability analysis, and they figured out that there was no way that Cyprus could have possibly bailed out the banks because the debt holdings were over 50% of the country's GDP. So they said that bail-in was the only option. And quite convenient, it came 11 months after that paper, and they didn't have a test case yet. What better country than a country like Cyprus? Interesting. Who are some of the biggest depositors in the Cypriot banks as well? Oh, isn't that Russia? Isn't there a lot of people in Russia? Very interesting how all this connects. But what do I know? But imagine that the IMF is saying that just 2 banks, that's it, just 2, were too big to fail. And I'm saying that because if you think about Cyprus, that's just 2. Imagine the United Kingdom or the United States, who have some of the biggest banks in the world. So if they couldn't do it in Cyprus, God help us in the UK and the USA.